Awesome. Hey, everybody, it's Pete. Good morning. How's it going? Welcome to Friday. Wacky week, wacky month of trading. There's been plenty of opportunity, but we've been reducing our risk a little bit on the share size of our initial positions of new stocks that we have to buy. Since it's Friday, obviously, we're going to open up to a little bit of a Q&A today, maybe take a look at some stocks that you're talking about today. But what I'm really going to focus on today, which I think is kind of exciting because we're going to be heading into this weekend. Obviously, one of the biggest questions we have, probably one of the biggest reasons that you joined us here on the live stream, is how to pick stocks. So we're actually going to do a lesson. In today's video, we're going to go over a lesson of how to use sector rotation instantly to take advantage of the best opportunities to see where smart money's flowing into those stocks. And more importantly, is being prepared for when those opportunities happen. And I'm going to show you exactly how to do it. So we got a lot to cover, even though it's Friday and everybody's a little worn out from the week. Next week is Christmas already. We got a lot to talk about today. So stick around. I'll be back in just 1 second. Okay, so thank you everybody for joining me. I just want to make sure I say hello to a few people. John A., good morning, pal. Very nice to see you here every day. John Bates, how you doing? NLOK. All right, we'll take a look at that one. Let's see. Myers Taylor, good morning, pal. How's it going? You know what? We're going to go right into the lesson. We're going to talk about FedEx, which had big earnings. Obviously, that was the cover photo today on the thumbnail. We're going to go into Rivian and determine whether or not buying this dip is worth it. But first, I want to start out. Last night, we actually, we've just launched our highest tier mastermind group. And last night was options. But that's not really the point. What I want to get across is a lesson that was taught last night. And I want to pull it up on the screen because I think it affects you. It affects a lot of people right now because you've heard me talking about buying stocks right now. There's plenty of opportunity, but the tape has changed, which means that we have to really be on top of our risk. We had a lot of new people come into the boot camp over the Black Friday special, end of Thanksgiving and that kind of thing. And I was shocked, shocked at how many people sit in losing trades for weeks and months, hoping and praying that they come back. You get all messed up mentally, your buying power is all tied up, and you're basically sitting there hoping that those losing trades come back. So I want to take you behind the scenes. This is actually an email from this morning that we sent out to members of our community, and I just want to point out this part right here. Okay, so we had our first session last night, but this is really the big thing that I want to talk about, and I want to make sure that you understand this. It was options, right? So obviously we're talking about options, but this is the big thing I want to talk about. And I know this sounds ridiculously obvious, right? Immediately discuss risk and cutting the losses if the trade didn't follow through. And this is the part that I'm speaking to everybody on this video right now, everybody watching the replay of this video. And that's a dramatic, I can't even say it strongly enough, a dramatic contrast to too many traders that don't accept risk and let small losses become account-ending nightmares. I just can't. We have some members that just started now after about a week or so. They are now kind of opening up to the fact that, you know what, I better ask for help. I better stop trying to hide in the corner and step out of your comfort zone and learn. And to me, it was interesting because we have so many new people in the community that are either just starting to learn or really just starting to learn that the market can, in fact, go down. And they're milking bad positions, basically hoping and praying that they come back. And some of these stocks are rolling over. We covered it yesterday. There's a tremendous, tremendous amount of stocks that are below the 50-period moving average, below the 200-period moving average, and they're probably not coming back anytime soon. So there's two ways that this completely messes you up in a big way, all right? The first one, which should be the obvious one, is you're losing money and your capital is being tied up in really bad positions. So if you bought stock and don't accept risk prior to the trade, you are sitting there on dead losing money. Smart traders will scale out, or as we just said in that email, get out right away. And the first thing you should be saying to yourself is, which stocks can I buy to make that money back? If you put on that trade, you should know exactly prior to putting the trade on what the dollar amount risk is for that trade. And if it goes down to that spot, you get out of the position because prior to putting on the trade, you accepted the fact that you might have a losing trade. Now, I already hear what you're thinking. Don't give me this crap about as soon as I get out of the trade, I get stopped out and it does exactly what I want. That's Not the right thinking. If you believe that happens more often than not, set an alert and get back into the trade, but don't sit in a trade that's going like this, lower and lower and lower and lower, day after day, week after week, and you're sitting there and you're like, please just come back. I swear I'll call my mother-in-law. Please come back. I swear I'll mow the lawn. Get that garbage out of your head. Get your head back on straight, which is the second part. Not only are you sitting on capital you can't use now, not only are you in a losing position and your account is dwindling, but now your head is all messed up because you're sitting and watching that trade. You have no control over the trade anymore because you're choosing to not take action. So it's not only watching your account go down, but it's draining you mentally. And now the responsibility for the outcome of you making money is completely out of your hands, which is the last place you want to be as an active trader. You want to be in charge. So as an experienced trader yesterday, I thought it was shocking to me that I thought that was an exciting topic. But as a professional trader, it's the very first thing you do is you respect risk, and then you learn how to make money on your winners. Because if you don't respect risk first, you're not going to be around long enough to understand how to make money on your winners. Please, if you take nothing else out of me today, this week, this month, whatever it happens to be, risk comes first. And the challenge that people have is they never planned for a trade to ever move against them. The very definition of edge means most of the time it works out, which absolutely explicitly means sometimes there's also going to be losing trades, even if you have the best edge in the world. So please get to the point where you say, I'm willing to risk X amount on this trade. If it works out, great. I'll figure out where I'm going to add or take profits. If I have that dollar amount and it moves against me, I'm okay with that because I accepted that as a business expense. If you take this one suggestion from me, your trading will change dramatically, which actually now is going to take us into the second part, which is we're going to discuss some stocks to buy. We're going to discuss FedEx. We're going to discuss Rivian. We're going to do a sector rotation breakdown, and I'm going to give you a spreadsheet, which I'm going to post in here. And then I'm going to move over into taking your questions about anything you have. We try and say the Friday segment, the last part of the segment, I want to make sure I get into some of your ideas, mostly questions about trading. Stock-specific stuff is fun for your ideas, but I really like to find out what are your challenges, what are your roadblocks, what are the biggest parts of trading that you seem to just, if I only solve that, then I'd be making money. If I only solve that, everything would be perfect. So we're going to save that for a couple of minutes. We're actually going to head on over. I'm going to take a look at FedEx and Rivian. So FedEx came out. If you didn't happen to see the news, FedEx came out and the Q2 beat was pretty good, 7%, and they raised. That's the big thing. We talk about this all the time. Raising is the big thing, and what was expected versus what actually happened. It's the growth rate that we're always looking for. So how does that translate into an idea in FedEx? Well, you can see that we've been working FedEx pretty hard. This was the longer term order flow to the downside. Looked like we were rallying a bit here. We actually had a couple of optimal entries here. After this higher low, this is actually a 1, 2, 3 bottom. If you happen to be new to the community, 1, 2, 3 bottom. And this right here would actually be the super aggressive entry. Again, if you're not, I want to come back on the screen. Don't misquote me, please. Again, this has apparently been the week of haters. What I'm just showing you right now at the 1, 2, 3 bottom is a way of identifying when a trend changes. As John pointed out there before, a potential change of trend. This is a way of determining, maybe I'm not saying buy it at the bottom, but what I am saying is the order flow changed. And maybe that means if you happen to be short selling, because this is a bearish order flow, if you recognize a 1, 2, 3 bottom, that would mean that you would move your trailing stop loss on a short sale down. Same thing if you're in a stock where you're buying it and it's going up and you see a 1, 2, 3 top, that's where you would move up, you'd move up your trailing stop loss to kind of keep booking that profit and secure it if you happen to see that it is reversing at that point. So I just want to come back on. If I talk about a 1, 2, 3 bottom, it's about recognizing a reversal of bearish order flow. It doesn't mean I'm saying, hey, buy FedEx at the lows. I have to keep saying that because I get people watch like 30 seconds and misquote me. So I want to keep it in the full transparent educational mode. Okay. So breaking it down into FedEx, this was the 1, 2, 3 bottom. We actually had a decent rally off of that, but we were still looking at this longer-term bearish order flow going all the way back to June. This did not hold, which is obviously why we keep redrawing our line. So once this broke, we drew a new line and we're still stuck here. Now, what's kind of exciting is right now we're trading at $252.50. We're up $14. So right now in FedEx, we've blown through these levels and we are all the way up here. But what's kind of interesting is we blew all the way up there, right up to this resistance level. Now, I want to get back into what we talked about a couple of days ago. We mentioned Hood. We mentioned PM, and we mentioned that it was lessons of understanding bearish order flow into accumulation, spotting the price action and the volume increasing during a pause, and then what kind of price action we needed to see in order to consider new trades to the long side if that bearish order flow is now confirmed bullish order flow. What's interesting about the FedEx trade here, and quite honestly, like we saw yesterday in the market exploding up the day after the FOMC announcement, hitting new all-time highs, I was very careful yesterday to say, do we hold the bid? That's the number one thing. In this case here, what level have sellers done something significant? So if we zoom out here a little bit on the FedEx chart to set up and script what we need to see in order to have conviction in a FedEx trade, well, clearly over here, right in this area around 250, 252, that's where the gap down happened after earnings, right? Rallied right back up to that level and sold off again. So what does that tell you? If you're reading the tape right now and watching FedEx, that's twice it got up to this 252 level and sellers came back in and smashed it down. If you believe that this longer term downtrend, which we are now right at, right? So if we go to the longer term downtrend from here, we're right there at that resistance. There's 3 different significant reference points that sellers have been coming in at this level. So even though FedEx numbers last night are being interpreted as fantastic, the stock as of right now is up $14. What does that mean for you if you're a smart trader and how you are planning out a new trade in FedEx? If you plan to buy FedEx stock today, what does that mean? For me, I'll tell you exactly how we do it. Let's say that, let's take Rex as an example. Let's say that Rex was actually in my trading office in New York City and comes in, he says, I'm looking to start building a position in FedEx. Earnings were good. This happened and that happened. But here's what's going on the longer term time frame. The order flow is still bearish. Reading the tape, 3 different times at 253, sellers came in and shoved it down. But this earnings report was awesome. And I want to start to get a position on here in case the order flow finally does break and gets above 253. I'll be like, you know what, Rex, that's a pretty good argument. But because 3 different times sellers came in, let's use our capital wisely. You got all that buying power. Let's start to build a position with only 1/3 to 25%. That's it. Do not size up on this idea until we get some feedback that there's enough buyers to push it past this level, and then we'll start to build a position. We need to see more than a day. We need to see, quite frankly, we need to see more than just pre-market to get in there. So I'm not buying it pre-market. Let the market open. Let the line in the sand. Now we know is that 252, 253 level hold. If that level holds and they step back up next week, then we'll consider adding to that position. Remember, yesterday we discussed by far the biggest mistake that new traders make, or even experienced traders who can't make a dime. You're trading too big relative to your results. Scale down, get profitable, get your head on straight, and then understand the situations to size up and how to size up. So we just built that whole argument about when and how I'd be considering FedEx as a buying opportunity. Rivian is a little bit different. Rivian did not have good news yesterday. Share slide after they cut their production expectations. Remember, when we're talking about revenue, we're talking about a company, we're buying the future, right? This is what we're looking at right now. Expectations. Rivian expectations were not good, and it's being translated into hitting the stock. It's down 7%. It's all the way down at $100, which is obviously, if you watch and read reminiscences of a stock operator, par is a big number, and that's the level it's got to hold. And not coincidentally, it's right there. So how does that translate into an idea in Rivian? Well, I'm already getting messages this morning about, should we be buying Rivian on this big move to the downside? Should we be taking advantage of this dip? Is this a dip to buy? Well, let me ask you a question. We had somebody posting all over YouTube on my comments for the last month about every time his stock goes down and reports bad earnings, he loves it. No. Who in their right mind would own a company and say, I love when the company that I own has bad news? I'm not, it's silly. I want to use a stronger word, but it's silly. So what do we need to see in Rivian? Well, let's work our way over on the weekly chart on Rivian. First, the bad news is out right now. When you have expectations are lowered going forward and you have demand for your product and you can't fulfill that product, you are literally capping what you can earn and turning customers away because they can't get what they want. So they're going to go to a competitor. Short term, this is not good news. We're going to see how it gets interpreted by the market. But am I looking to buy this stock today on the dip? Maybe as a day trade for an hour if the volatility kicks in and we get a little bit of a short covering rally because of how hard the stock's pushing down. But I am not looking to buy Rivian stock until I see smart money step in and they start to pay higher prices, because that would mean the story has changed. Until I see that, I'm not looking to buy this as a little bit of a longer term trade. I'm simply looking for this right now, maybe as an active day trade. But until I start to see higher highs, higher lows, and closing at the highs and higher volume, and that happens over 3 to 5 days to 2 weeks, only then will I start to consider looking to get long. I am not buying bad news. Bad news is bad news for a reason. Something changed. Expectations of you can't meet deliveries, that's not good news. So I am not looking to buy this. So we just outlined two different scenarios in those two stocks. Now I want to walk over and I want to give you the lesson. First, I'm going to give you a spreadsheet. I want you to click the link in the chat right now. If you're watching this on the replay, I'll post this link in the description below. Okay, so we're going to talk about this. We're going to talk about this spreadsheet, and you can see this is my most updated spreadsheet. Maybe you can't see it. You can see over here, it is my December spreadsheet. So you can see that right there. So I'm going to give everybody the link for this spreadsheet, and then I'm going to walk you through how we actually use the spreadsheet. Okay. One of the biggest questions that we get, okay, so the link is in there. One of the biggest questions that we get from day to day and week to week is how the heck do we understand sector rotation? One of the biggest things that we do every day is you always see me start out with this. And everybody's asking me questions about, okay, that's great. Where do you get the list? How do you find the list? What are we supposed to do with the list? Today, we're going to answer that question. Now, it doesn't matter if you're day trading or swing trading. What I'm about to show you works for both. So when you're choosing to buy stocks, the way that we do it, we have what we call the stock market power pyramid. The bottom of the pyramid starts out with the SPY, the S&P 500, the NASDAQ, and the Dow. We go up one layer to sectors. We go up another layer to industry groups. So sectors might be technology. Above that might be semiconductor stocks. And then you have individual stocks in the semiconductor stocks. That's how you work your way up the list. We get a ton of questions, which I think are great questions. And I'm going to show you my day trading screen, which is my TradeStation screen, how I map this out during the day, and then how that translates into finding ideas when they are moving right now. Look, we're not investing. Let's make that clear. What we're doing right now, we're stock trading pro. We're not stock investing pro. That's going to be a whole other community. Right now, we're talking about, I want to put my money to work. I want to catch the next move. You listen to us a lot. We talk about the push and the pause. Doesn't matter if you're day trading on a 5-minute chart or swing trading on a daily chart, looking to hold the stock for the next 3 days or the next month, for argument's sake, let's say. All right. So let's actually start moving our way over now. And this, I'm going to come off the screen. And this right here is a list of stocks on hourly charts, which represent the major sector ETFs. Okay, so you have the SPY, the Qs, the diamonds over here. Actually, that's the wrong one. This one is actually supposed to be the XLE, which is the energy. Then we have financials, XLF, XLK, XLV. This is the one that we've been spending a massive amount of time on, the XLV. If you remember yesterday, when I mentioned yesterday, and actually several times this week, I said we're trading the healthcare stocks very aggressively this week. We're focusing on them. They're moving. They're giving opportunity. They're exploding. That's how we start to find those. You still need to determine entries and exits and share size and longer term order flow and that kind of stuff. But what we're talking about right now is how are you ready in the moment? Raise your hand if you're like, my gosh, why do I always miss these opportunities? And how can I be prepared for when they unfold? So this is one of my sheets. This is the day trading screen. You could do the same exact thing with your swing trading screen, but instead of it being hourly charts, you would set these up on daily charts over 3 months, as opposed to 60-minute charts for day traders over 3 days. So I'm going to break it down again for you, just so to give you an idea. Again, you could snapshot this, or I would strongly recommend watching the video more than once. XLF, financial; XLK, technology; XLV, healthcare; XLB, which is basic materials; XLC, commercial services, communication services; IWM. IWM is small cap, Russell 2000; XLY, XLP, XLI, which is the industrials. So what I'd suggest doing is watching this video again on the replay. It's obviously the replay is done. As soon as the video is done, you can get in there and watch the replay again. You can snapshot this, make a big list out for yourself. Now I want to take you over into I'm gonna look at two different ones. So we're going to take a look at XLV, and we're going to work this one out. We're going to expand it a little bit, and I'm going to come into the corner over here. So what you have here is multiple days here in the XLV, which is the healthcare sector. And each of these candles represents 60 minutes of trading. Now you could imagine this being a daily candlestick, so that would be 2 days. You could imagine this being a weekly candlestick, so that's 3 weeks. It doesn't matter what time frame you're trading on is relative to you, but what I'm showing you now are the principles of what we're looking at and the tiniest piece of understanding order flow and tape reading. So let's just say, for argument, you happen to be day trading like we do for the most part. You have pockets of opportunity, 3 hours worth of buying, an hour, 3 hours worth of buying. You have 3 hours worth of buying, and then you have mostly selling. So now the question comes in is, how do you take advantage of whether you're day trading or swing trading? So again, that could be a 60-minute candle. It could be a daily candlestick, a weekly candlestick, a monthly candlestick. You need to determine what time frame you trade on. Are you working a full-time job? Then you need to watch different charts. If you're day trading, you can do exactly what I'm showing you on the screen here. This sounds exciting, right? But I talk about this all the time. We've had 4.5 hours worth of live coaching this week with the members of our boot camp. And one of the biggest things that we discussed, trading, the actual trading part of it after the market opens, that's the easy part. The easy part is trading if you are prepared and do these things prior to the market opening, prior to the week starting. If you happen to be swing trading or longer term position trading, you need to set this up so that if you recognize something on the tape, if you read the order flow and you're like, wow, that's really obvious, you need to have a list like that to say, now I know that's where the smart money's going. I'm going to piggyback and look for a spot to join them. So if we're taking a look at healthcare, for example, and you can see that there's been some really nice pockets of opportunity in healthcare. If we go over into some other ideas, financials, yesterday for 3 hours, woke up and there was opportunity in financial stocks. And you can see over here, there was a really good opening a couple of days ago. Now, it doesn't matter if you're day trading or swing trading right now. I want to be clear. I'm showing you the principles of first how to recognize it when you go through the stock market power pyramid, the market, the sectors, the industry groups, and then up to those individual stocks. So the obvious question now is, how do you get prepared for this? So the same way that we just looked at, okay, let me find where the smart money is doing something now. Let me find the industry and the sector where smart money attention is allocating capital at this moment. Our job, the way that we look at things, is we're looking for the next move. We're looking to keep our capital going in that direction. If it works out, great. We learn how to add to those trades. If the tape changes, we get out and we look for the next opportunity, which is why this sheet is set up this way, from minute to minute, hour to hour, day to day, like that in a heartbeat. You should be able to spot what's going on. Now, obviously, there's more to it. There's understanding the optimal entry. There's understanding share size. There's understanding the profit maximizer. There's understanding longer-term order flow. But this is a really good place to start, because at the very least, you're going to start paying attention to the same stocks that the smart money is paying attention to. How do you know they're paying attention to it? They're actually allocating capital because they're paying higher prices from 1 hour to the next, 1 day to the next. That means you need to be prepared, which is the spreadsheet that I just dropped into the chat there. So what does that mean? We just talked about healthcare. So you can see what I want you to do is you're going to go over here, go to File, and go to Download, and download yourself a copy of this spreadsheet. Let me actually make that a little bit easier for you to see. You're going to go into the corner over here. You're going to go to File and Download and grab a copy of the sheet for yourself so you can take it. So we just talked about healthcare stocks. We just talked about financial stocks. So if you're looking at those ideas, if healthcare becomes in play, okay? If financial stocks are in play, if energy stocks are in play, the first thing you should do is have a list prepared. So if we go to healthcare, we're going to scroll right down to the healthcare list. And we have two different lists here on the bottom. By the way, there's one with a wider list of stocks, and then there's one, the second tab, which meets a tighter risk parameter. So we'll scroll down to healthcare, and instantly we will take this list of stocks right there that meet the minimum criteria all the way down to the entire list of healthcare stocks. And we will take that list and put it into a watch list of its own. And now we're going to sort that watch list from the month, the week, the day, and the hour. And now we break down which of those stocks that are in that sector are performing well now. Because I'm going to tell you right now, you're going to pull up that sector and you're like, oh my God, he lied. You're going to pull it up and you're going to be like, oh yeah, that's great. Healthcare is at the top of the list, blah, 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 blah. I just found 3 stocks that weren't going up. And you know what I tell you if you were on my trading floor? I'd say, wake the hell up. Find the other 12 that are doing exactly what we just found out and focus on those stocks. You should not be focusing on the stocks that are not doing what you thought. You'd be amazed at how many people come into the community. We make game plans and we map out 7 ideas that are the perfect ideas for the day. 4 stocks do exactly what we said. 3 stocks completely go in the opposite direction. And new traders like, I don't understand. Those 3 stocks aren't doing what? Who cares? Find the ones that are doing exactly what you expected them to do and trade the heck out of them. That's how you go from overwhelmed, too much information to looking at, to breaking it down further to say where right now, I'll come off the screen a little bit, where right now is smart money paying attention to. So when you break down what I just showed you, and again, I just gave you the spreadsheet, when you break down sector rotation and sector scanning and how long have they been doing it, for the last 30 days, for the last hour, for the last 3 days, you start to stack the order flow. You start to stack your conviction levels. Now, I want to say this, and I want to say this very clearly. This is the foundation of the principles of what to look at. This is not understanding how to trade. I can't express that strongly enough. The difference between understanding what to look at and understanding how to make money are 2 different skills. Understanding how to spot this stuff puts you in a different category from everybody else who says the market's overwhelming. At the very least, now you understand why stocks move and how to be in the right stocks, at least be watching the right stocks. The next part of that is understanding timing, how to get into those positions correctly, how to work those positions correctly. Should you push up and pause and get out? Should you push up and pause and add? How do you know when the stock is exploding and gets to a point where maybe I should be moving up my trailing stop tighter because the tape changed? That's trading. What we just talked about is game planning. The next step after game planning is understanding and having these conversations about managing these positions while the market's unfolding, while you're day trading, while you're swing trading, because there's different ways of setting up the charts, setting up your watch list, setting up your scanners. So now that this stuff unfolds in real time, what I just showed you is how to do it on a scanning basis. There's another way to do it where we call stacking the order flow, which is actually building watch lists that spit these ideas out for you by the hour, by the day, by the week, and by the month. And once you learn how to set that up and put the right stocks in there, trading can become pretty magical, because at that point, you are prepared before it even happens. And there's nothing that will eat away at you more than seeing a stock that has exploded and you missed it because you aren't ready for it. So I'm going to say this one more time. It's better to be prepared for an opportunity that never comes than not prepared when one does. So what we talked about today, I would strongly recommend you watch this video more than once. Strongly recommend it, because this is it's not advanced, it's foundational stuff that puts you in position to win. That's what this is. It's understanding how to be in the right ideas when you choose to buy stocks. We're not talking about buying stocks that are collapsing. We're talking about smart money has attention on those stocks. How do we know? They're buying them. They're holding higher lows. They're paying higher prices, and volume is increasing. And it's happening from 1 hour to the next, and it's happening from one day to the next. When you start to stack the order flow, you now start to also stack your conviction. The last part you need to do is understand how to actually make those trades in those positions. We started today talking about managing risk and respecting the downside, and we ended today about finding stocks that have a high likelihood of being ones that you want to watch. All of those things together are what make trading probably one of the most fun things you could ever do if you're prepared, if you respect risk, if you understand how to manage profitable trades. Put those pieces together and the whole stock market changes for you. It becomes a really exciting place to be. All right, it's actually 8 o'clock. I have to get ready for our other meeting. Watch the video again. We're getting a few people asking about how to get those charts. Go into the charts, watch the video one more time, fast forward up to that spot, take a snapshot of it, and put all those sector ETFs in there. You'll be pretty happy. Those are 60-minute charts or daily charts, depending on whether you're day trading or swing trading. All right. If everybody could please just do me a favor. If you found this stuff valuable, please do me a favor. If you haven't done so already, smash the like button and hit subscribe so you make sure you get updates on this stuff. So thank you, everybody. I want you to know how much I appreciate you being here with me. Have an awesome weekend and have a great day trading today. Take care now.